Hi guys, this is an investment trading mecca, and I'm coming at you with a video on my my market analysis for the next year or so. And obviously this can change, but just based on the recent events, how the market's acting, and price action, this is what I'm currently seeing. As you can see, this is the S&P 500, and we are currently getting just crossovers or let me just break this down quickly. Blue line is the 9 EMA. Green line is the 20 SMA. These are just moving averages. Just a little simple tip, simple little thing I use for my trading. I normally use these on smaller time frames. On the daily, here I'll break it down on the daily for you. When these cross, I normally become bullish or bearish. So as you can see on the daily, hey, this crosses. I'm more bullish on during that lifespan. Cross the downside, I'm bearish. Cross the upside, fake out. Cross the downside, bearish. Cross the upside, fake out. Cross back down, bearish. Cross the upside, bullish. Cross the downside, bearish. Cross the upside, little bull run. Cross the downside, bearish. Cross the upside, you got that bull run we just had. Cross the downside, bearish. So that's how I do it more for my swing trades, day trading. I'm looking at that and I'm determining just for the short term, just day in, day out, hey, am I going to be bullish? Am I going to be bearish? As you can see, cross the downside of late. So I'm more bearish. When there was this cross right here, I was more bullish. And sometimes there are fake outs, as you can see right here. It crosses, but barely cross, and then goes back to the downside. So it doesn't always work perfectly, but I just find I do like it. I like it as a judgment. I'm always watching price action, but I like it as a judgment on, hey, what should I actually be looking for? So if you look at a monthly chart, much bigger time frame, space this out so we can see the most possible. And I circled right here, but we got right now what we're going through right now. Interest rates super high, housing market crazy high, cost of living just crazy high now, gas, everything just crazy high, right? So as you can see, the cross, and I'm gonna backtrack a little bit. We got the tech bubble here. You can see the cross, the absolute tank of the market. We got the '08 financial crisis, housing market crash. You got the cross, the absolute tank, and these crosses are lining up with those time frames. Here you got '01, and it's pretty much topping. Then the actual cross in '01. Here you got it crossed in '08, lines up pretty well. Here is a fake out, crossed and crossed back up, and then absolutely ripped. And then actually during COVID, there was no cross. So just because of how quick it ripped up, if it probably would have tanked a little more, if this green candle didn't happen right here, the line probably would have crossed and it probably would have crossed back up, and then you could have got back in long. But as you can see, as it was here, it crossed and then crossed back up, and then we went on a pretty good bull run. But as you can see, we have crossed. We retested the 20 and failed. We're looking extremely bearish for the long run, and normally these bear runs last for a year, 2 years, just based on what I'm looking at, and or it's around 50% drawdown from the highs. So let's backtrack. We got the tech bubble, parabolic run up, kind of similar to how we ran up here. Parabolic run up, very similar. From highs, we have around a 50% drawdown. Tech bubble, as you can see here, in '08, created new highs, also previous highs of the tech bubble, same highs, but did break new highs. We have a 57% drawdown, so 50% drawdown, 57% drawdown, and then we have over here the highs that were created, and then there was a 15% drawdown. That one was the fake out though. So if there's a fake out, if there was a fake out per se, let's say we get back over the moving averages, we cross back up, we're probably going to go on another run, honestly, and trap everyone that is bearish. And honestly, everyone everywhere is super bearish, at least in the financial world. You go anywhere, if you look anywhere, people are like, we're about to witness a collapse. Oh, it's going to be like '08. So, might trap a lot of people, honestly, if that does happen. Personally, I think we are about to tank, but um, you just gotta keep watching price action. I'm looking for that cross. Obviously, we get that cross back the upside and be looking to get back in long or start getting back in long term. So, as you can see here, right now we're at a 25% drawdown, or the lows of this bear run are at a 25% drawdown, right around 25. 50% is right around 240 on SPY, which is, don't get me wrong, absolutely crazy to think about, but I mean, it wouldn't be surprising. I mean, there was absolutely no pullback in this bull run. So we'll see what happens. Also, these events, as you can see here, we have the cross that happened in around beginning of 2001. The bottom happened in about a year and a half later. Here, the cross happened '08 April. Bottom happened pretty much April of '09, March of '09, so around a year. So around a year and a half, a year, I'm be looking to get back in. Or when we hit that 50% mark if we're extremely violent with the drop. I mean, here with COVID, it was around the 35% drop, so it wasn't. But I'll be looking at this area because that is the 50% mark. So we'll see what happens. Just want to give you kind of my insight on what I'm seeing, a little tips on how I see the market, just little and also just to help you guys see, because obviously even without, if this chart was just clean slate, nothing was on it, you could still see it, obviously. You know what I mean? When I day trade, I don't need indicators on there, but it just helps out sometimes for people that are brand new. So if you guys want, just pop on the 9, pop on the 20, use the 200 too. And it kind of helps you just find trend easier. The more you trade, the better you get. Eventually, you don't need indicators, but it also is helpful because obviously, if bots are trading algos, they're trading off of something. So sometimes just a simple crossover that triggers them to buy, to sell. So that's just my thesis on it all. But thank you guys for watching the video. Like, subscribe, leave a comment, and hope you guys enjoy your day.